Facebook readies itself for a blockbuster IPO. IPO stands for Initial Public Offering, which in plain English means a company putting itself on the stock market, or basically that Facebook is announcing its debutante ball. Facebook is seeking to raise $5 billion in its offering. If that figure is correct, Facebook would represent by far the largest global IPO ever by an internet-focused company. Google's debut raised $1.9 billion and is currently the largest US internet IPO. Some experts have suggested that Facebook could be valued at $75 to $100 billion once it starts trading. But there's a lot more riding on Facebook's paperwork than wealth creation. The social network has become an entire ecosystem supporting independent apps makers and gaming platforms like Zynga. Facebook's filing will also have implications for companies that depend on it, as well as the social media landscape at large. Until then, analysts are left to speculate about Facebook's revenue streams and profitability and whether it really deserves a $100 billion market value. Now let's look at how Facebook makes money. The majority of its money is from advertising, a combination of search and display ads, and the sales growth is incredibly robust. Facebook has grown by grabbing market share from Google and Yahoo. Likely that advertisers will be able to even better target their audiences as Facebook goes deeper with integrating apps, games, movies, and music. Facebook's other revenue stream is its payment system for purchases within apps and games, Facebook Credits. Facebook keeps 30% of the revenue from those payments and passes the remaining 70% onto the app's developers. Facebook Credits now comprise 10% of the company's total revenue. So, can we buy shares on Facebook today? No, sorry. What's reportedly happening today, and almost certainly happening this week, is that Facebook is filing a prospectus for its IPO with the Securities and Exchange Commission. The prospectus will be a fun read for the finance folk. It's an in-depth look at finances, projections, and how Facebook sees the competitive landscape. It's also when Facebook finally says how much it thinks it's worth, or rather, how much the investment bankers it's hired, supposedly Morgan & Stanley and a few others in this case. And when I say worth, I don't mean how much money it has in the bank or how much revenue it takes in. The gigantic number, that $100 billion, that you'll hear associated with Facebook today is a flimsy one, I guess. It's how much the company is expected to be worth as it continues to grow over time. After the prospectus has been submitted, there's a quiet period while the SEC considers its validity. Bottom line, assuming Facebook files all its papers today and they're all in order, it's going to be a few months before Facebook shares are actually listed. Okay, now, am I missing something here? So, I mean, there's lots happening with Google privacy and Facebook going on the stock market, and the common thing between all of these people is they're all making $1 squillion from advertisers. Now, on the other side of things, what brings people to these sites is the music and movies and all these sort of things. Of course there's social interaction, but because of these other benefits that people are not getting paid any copyright for, the advertisers are making $1 squillion. And I'll stick to my point that I think that some of this whole copyright war that's going on could be adjusted if advertisers could take some responsibility and pay some money back to the copyright owners and intellectual property owners. I think that would be the fairest way.